This is a trade recap for Monday, May 4th, 2026. Number 2 of 10 of phase 5 of One and Done. And let's go ahead and kind of go over some things and get into it. But first and foremost, if you're new or struggling with day trading and you are looking for a high-level coach or mentor, I highly recommend you check out Pat Mitchell over at tricktrades.com. He knows exactly what he's doing, and he proves it day in, day out, live on screen share every single day. If you want to, again, truly learn from a master and someone who does this on a professional level daily, he is the man you need to be learning from. Check out the website, check out the service, read up on his background. It'll be well worth your time and looking into him. If you would like a sampling of the information, head over to his YouTube page. He has over 1,700 videos on there, and it is an entire wealth or vault of knowledge. It'll just be extremely difficult, if not impossible, for you to crawl through every single one of those videos, pull out the little pieces of information, and then put all those pieces together yourself, unless you have a free decade or two. Now, with that being said, let's go ahead and jump into this morning's trades and the charts. So if you are new here, the way this is set up, we only trade SPY and Qs. Those are the only two tickers. The top row is SPY, bottom row is Qs. Now here on the daily chart, there are these blue levels. These are the levels Pat plots starting the night before and then refining the morning of, and then builds a trade plan around them. From there, they don't move whatsoever. They are static, and that's the way it should be. If you have levels that you keep adjusting, especially after the market's open, and you had a trade plan based around them, your plan's invalid at that point. I throw my risk levels on there because that's something I personally like. Pat does not, and that's more or less how that all works. So, looking at SPY and Qs, we were kind of more favoring SPY. Just from where it was opening up, Qs was kind of closer to its level here. And even though there's two blue levels here, this was basically one trade on SPY. Qs kind of had a more traditional split, with the exception of while we were opening close to this level above it, we actually didn't want this long. And Pat guided us and explained to us why. And so we're basically either going to come up, test this one to take the short, or maybe see this one come down, break through, come back up to test, and then enter short and write it down. Now that didn't really happen on Qs, and SPY kind of went sideways there at the open. They were kind of doing different things at different points, so a little disconnected, or they weren't congruent. I think what else? We also saw some kind of weird price action where you get these, again, seemingly grindiness, and then all of a sudden you get slammed with a bit of volatility. I thought that was a little odd in the price action this morning. So as SPY was selling off, kind of came back down here, pull up my entries, and then kind of started working its way back up, and kind of marked out this yellow level up here, and basically decided at that point in time, like after the sell-off, it came up, I would start in very, very small, because ultimately I really want to hold out for these levels, this actual trade. So entered with one, got kind of that immediate reaction on it, and as you can see, entered with one, paid with one. And then it was just kind of patient, came down, found support, came back up, broke above this level, then came into this level kind of proper. So I entered with one on the approach, and then tried to hold off for one at the level. And then when it kind of got that first reaction, pulled one off. So now I was only holding one. And then I was just trying to save that last one to kind of see exactly what we were doing, because we were getting these weird volatile dips, but they would get bought up, which was really weird. So again, came up, broke a little bit above the level right here, and then sold off some more. Was just, again, still trying to be patient with it, just to see, again, Pat was guiding us during the entire time what this was going to do. And then it came up again, and then really sold off hard on that one, and then dumped it on the last of the contract right there on that, pushed downwards. Which, again, it did what it had been doing before. It had this nice volatile, quick pop, tested a second time, and then immediately got bought up and pushed and squeezed. So one of those things where this was actually fairly odd in terms of like price action today. But when you see these things happening, size down. That's probably the biggest thing, is like make sure you size down, recognize what's going on, because it seems like there is some kind of game afoot. Someone knows something, like it's weird. And as Pat tells us, like during like transitionary markets, especially when you're at like all-time highs, sometimes games happen, irrationality can happen. So something you really, really need to pay attention to. Otherwise, again, you're deer in the headlights. You're going to get squeezed on, messed with, shaken out of your positions when you shouldn't. But this is the advantage of having a good coach and mentor, has seen all these kinds of different like market conditions and circumstances, because ultimately he will be the one that can guide you in terms of like, okay, seen this before, and it generally does this as a, again, kind of a how it plays out. And being a new trader, you're probably not going to have that screen time and experience. As someone who has more screen time and experience, one of those things where even I notice like there are things that I should be recalling this from the time we've seen it before, but ultimately it's like I'm not recalling it. So it's like one of those things like that really wasn't committed to memory. So it's one of those things where you really, really need to listen to your coach's guidance whenever things get kind of squirrely. And if your coach can't guide you on these things, then it might be time for a new coach. So with that being said, all in all, emotions were good. Didn't get oversized in this at all, especially once we saw this kind of how the price action was forming. Was not looking to get any kind of size in, and it didn't really need to. Honestly, off the 3 contracts, made $76. So it's one of those things where it's like, okay, so pulled out a per contract average of just over like $25. That's actually really good. It's a little high, but you can do that with volatility. So instead of, again, using size when things are, again, more stable in terms of the price action, you can use range and volatility to, again, pay. Because the last thing I do is throw size in when this thing is acting squirrely and you have no idea what it's necessarily going to do, because you will just, again, probably set that money on fire because you're going to get freaked out in these positions. And the last thing you want to do is, again, take unnecessary loss, expend capital unnecessarily, not just the actual, again, money that's in your account, but also your mental capital, because that's something that Pat, again, really, really, again, has talked to us about. It's been a little bit, but it's preserving your mental capital, because the reality is most people can only make a handful of good and proper decisions in a day before they kind of expend that mental capital, and then everything goes more or less out the window. So choose wisely where you kind of expend that. And that's something I didn't do always. Again, and that was probably one of the reasons why, again, there's a period in my career, and even in, again, the size of program that I do now, and towards the beginning, where I would say I was over trading to the point where I would go in to do, again, we log all of our trades as part of size up, as part of the protocol, where I'd be logging 5 trades in one day. And it's just like, what are you doing? Again, so that's a good example of doing it wrong. You need to focus on doing it right, trade to trade well, follow the plan, follow the strategy, follow the process. Know kind of where you stand. It's like you may be trying to become a professional trader, but you're not a professional trader. Recognize where you are and trade appropriately. And then work on, again, building yourself up to that level. It's all about, again, the journey, not the destination. And one of probably the best thing, or most important things Pat ever said that I kind of latched on to was, no, it's actually several things, but one of them being enjoy the process. Because if you don't find enjoyment in the process, you're just going to probably drive yourself crazy and quit. So that is more or less all I have for this one. But again, if, like I said, you are new or struggling with day trading and you're looking for that high-level coach, check out Pat Mitchell over at tricktrades.com. He is the one you want to be learning from. If you're truly interested, you can find links in the description below. Save you a little bit of money on your first month, and hopefully we'll see you in the service. Other than that, have a good one. Catch you later.